Good morning, everyone. Hope you're well. My name is Hallid Smith from the Greenhouse Foundation. Good morning, Angelo, Fatima, Lizo, and Samira. We're going to be covering financial planning today. We're going to try and finish it as quickly as we can. I know we all have businesses to run. So we're going to try and finish it as quickly as we can, and we will have time at the end for Q&A. And the session will be recorded. So we will record the session and we will share it with you guys as well. So you don't have to take notes. We'll send you the PowerPoint presentation. Okay. So financial planning, before we even get into that, right, I wanted to maybe just explain what we do as a foundation. So our foundation is there to support small businesses. Is job creation. Our focus is job creation. And we do that by supporting small businesses through workshops, which we run every month. Our webinars, we run programs for the city of Cape Town in all the districts. So we do face-to-face, we do networking events, etc. But remember, our core focus is job creation. Okay. We're moving on. I hope you guys can see my PowerPoint. So financial planning. So we're going to cover some content today on the very basics of accounts, statements, the reason behind all of that, and how to plan better. Okay. So the alphabet of money. Okay. So this is what we say, right? That when you look at where you are in your business, right? And this is an area, finance is an area where a lot of small businesses struggle, because you must remember everything you're doing in your business has a cost. And we are in business to make money, not to be busy. So we run turnaround programs, for businesses that are struggling. Some of them are large businesses, some of them are small businesses, some of them has been established, for 5-10 years, some of them 15 years, 20 years old. They're operating, they're operating in their business, but yet they're putting staff off, right? They're putting staff off, right? Which is a problem, because they cannot come by. Because the thing is, when you look at your finances, right? When you're looking at your finances, you need to be balancing, right, your cash flow, right, what you're doing with your money, and you need to be able to track where your money is going everywhere at any specific time within your business. And there need to be a very, very clear plan, right, on where the money is going. You need to understand the numbers. And when you look at companies, like business partners, even banks these days, they want to meet you, right? If you go for finance, companies like business partners, they manage over 4 billion of their own funds, right? It's their own funds, which they give. When you look at the amount of funding that is available for small businesses these days, for equipment and machinery, you can access that funds, but they don't just want to see the paperwork. They want to speak to you as the business owner, and they want to understand the numbers. They want to understand the numbers, irrespective how big or small you are, irrespective whether you're doing 10,000 turnover or you're doing 10 million turnover. They want to understand, is it profitable, right? Are you making money within the business? Do you, as the business owner, understand the numbers? This is what they don't want to just look at your papers, right? Because a lot of the small businesses, we don't understand the numbers. So what we do is we appoint an accountant. So the accountant comes and the accountant does all your books, right? It does your books. If you are VAT registered, the accountant will work out your VAT and say, great, you must pay this, at the end of the month. But an accountant, right? An accountant does not assess your financial risk. An accountant is not involved with operations within your business. They don't know what you need. They don't know where you're heading, right? So all they're doing is they're taking the numbers and telling you, okay, great, this is what you need to give SARS. So you need to understand the numbers, within your business, right? It's not something that an accountant can do for you or a chartered accountant can do for you. It's something which you would need to understand very, very well, right? I know we have a few more guests. Good morning, Ina, Frolin, Lizo, Yushra, Songi, good morning, everyone. Angelo, good morning. We are recording the session, just so you guys that just joined us. We're recording the session. We will send you the PowerPoint presentation, and we will also send you the recording of the session. So you don't have to take a lot of notes, because I do talk a bit fast. So I will go through the content as quickly as we can, but we will share you the information afterwards. Good morning, everyone. I hope you are well. If you've just joined us, my name is Hallid Smith from the Greenhouse Foundation, and we support small businesses. Our core focus is job creation. We want you to grow. We want you to grow. We want you to create jobs, because it's not up to government. This is what people think, that yes, it's a priority for government, but it's not up to government to create jobs, right? It is our job. It is our job. Small businesses, not big businesses. Big businesses they're not there to employ lots. They employ people, but they're not employing more people. They now want to make money, right? They're there to make money. They want to make money. They're not gonna be employing a lot of people. If you look at the amount, 4% of all the businesses are large companies. 4% of all the businesses are the large companies. The balance, 96% are small micro enterprises. That's the bulk, thousands and thousands of companies, right? Small businesses. If we each just employ one person, right, it'll make a huge impact on our whole economy. And remember how economy works. When our economy grows, everyone benefits, right? There's a benefit for everyone benefits from a vibrant economy, right? So it is win-win. But we, as small business owners, I include myself in that, because I'm a small business owner as well, right? Even though we're a foundation, we run it as a business. I mean, we're small, but we believe that we can make a difference, right? So we start with our business, and if everyone starts with their business and believe, you know what, we can employ one or two people, we can take a little bit of a risk, because this is really what it's about. And this is why your finances is so important, right? Because the more you understand, the lower your risk. The more you understand the number, the lower your risk. So these are the things that you need to be able to track at any point in time within your business. You need to be able to track your income, expenses, liabilities, and assets, right? These are the things that you're going to track every day. And it's not something that is done, when you look at annual financial returns, which is what people think you need when you apply for a loan. People think, what, I only need it, because when you go for a loan, they say, what, can you give me your annual financial returns? And now they're going to see what is the financial health of your business. It's not for that only. No, guys. Yes, you do need it. You know, when you're applying for loan, applying for funding, or you want to sell a piece of your business, or you're looking at investors to come and invest in your business, they want to see it, yes, but it's actually for you. It's something which you're gonna review, right? Monthly, you're going to look at these documents because it's going to give you a roadmap of where you are and where you need to be. So these are the things that you're going to be tracking, right? Every day, right? In your business, right? And remember, it varies, right? And when you look at these things, right? Your accounting records, there is lots and lots of tools these days, right? There's tools, there's technology that just makes things easier for you. We're in the age of technology, right? So there is tools that makes things easy for us. And, you know, a lot of people steer away from technology because we don't always understand it, right? But it is there to make things easier. So there is tools which we can use, these apps on our phone, right, to make things easier for us to be able to keep records of where the money is going, right? So if we go put fuel in, yes, that's an expense, right? Now to go and you need to keep that receipt, right? But we often lose receipts, you know, and the paper that is printed on, you know, in a year's time, you know what, it fades. So yes, so now there's apps, you can literally take it, you can take a picture of it, and you can store it in the cloud. Why? Because if it's in the cloud, it cannot go missing. This is the thing with pieces of paper, you know, goes missing. And people, I remember, had a receipt box, so they take all their papers, they put it in a box, and when it comes time, you know, for tax returns, they just take the whole box and they give it to an accountant and say, yeah, or their bookkeeper, go and sort out all of this paperwork. You know, this is not how it's done these days, right? It's made easy, and you need to understand where it's going, right? So if you look at a lot of your banks have very nice software built in the back end that allows you to do a lot of your bookkeeping, you know, through the bank, right? Because remember, the bank tracks money coming into your account and money going out. So it makes it easier if you're able to use the bank applications. You'll be able to track, what is this for? Where's this? Because an accountant cannot decide for you if money's going in and out, money's going out. He can't decide what money that is, right? You remember, because you're spending money on something, he needs something to tell him that the money that was spent, right? I am going, you went to Nando's, right? So you use your business account. So now you use your business account, he sees Nando's, 500 Rand for Nando's on your bank account. It says Nando's, 500 Rand. So what must he do with that? Because he doesn't know. Did you order Nando's for everyone? Like, he can't make a decision to say what that is. You need to make a decision to say, you know what? For that session, we had a meeting that was a business meeting. Because I don't have offices. Right? So we had to have a business meeting there. And if it's a business meeting, right, and we're having Nando's, it's a business meeting. Guess what? I can claim that as a company, as an expense. Can we see how it works? I can claim that as an expense. Yes, I can claim that as an expense. And if you in catering and you go to Pick and Pay and you're using that business account, but you in catering or you in training, and now you need to deliver catering, you need to pay for catering. Guess what? That's an expense, right? But it's an expense. So this is what accountants do. They need to make sense of the numbers, but it's difficult if they're not involved in your business, right? If you are the accountant, you know what's happening, so it's easy for you to make sense of the numbers. But an accountant cannot, right? Cannot make sense of all the numbers in your business, right? Right, financial ratios, and we're going to go into that so that you can understand how that financial ratios and what it is, right? And there are many, many, many financial ratios like liquidity to determine how liquid are you if you should need money, right, within your business, right? There's liquid ratios that determine how in debt are you, how profitable are you. So when you're applying for finance, right, or you need a loan, or you want an overdraft facility, or you need a piece of equipment or machinery for your business, right? Someone that is providing that funding need to determine, are you able to pay this back? They need to determine how healthy are you financially, and they use these ratios to determine, how what your financial health status is, right? So these ratios are really, really important for you to understand, and we'll get into some of the ratios in a short while. Okay. So if we look at the records, right? So your records, money coming in, also money coming out, right? Those things are very, very important, especially if you're in a cash business, where cash is coming in. So those records, right, determines what is happening in your business and if you are making money, right? So remember what happens. Your business has ups and downs. Your business has ups and downs. So if you look at the end of the month, if you're running a business, right, and there's nothing left, it's nothing left. There's nothing left. So no matter how much you make, there's nothing left. So whether you make 10,000 or you make 10 million, right? There's nothing left at the end of the month. You have to go back and see, well, where's the money coming in? Where's the money going out? You need to track the money. This is how it works. You need to track the money to see where the money is going. And you cannot wait. You cannot wait long to do this, right? Because if you're in businesses, and I remember one of the businesses that we were assisting was in turnaround. They were in turnaround, which means they were putting staff off. So we do work for the Department of Labor, right? They run a turnaround program because they're saying, let's see if we can help. Let's see if we can help this business. They're an established business. They've been operating for more than 20 years. Why do they have to put off all of the staff now, right? What is the problem? Why did they have to do this? So now they say, come, we must see if we can assist them. Let's see if we can help them so that they can retain the staff instead of putting the staff off. So now we go into the business. We go into the business and we see, because we need to figure out what went wrong. So how do we do this, right? How do we do this? How do we figure out what went wrong? The first thing we want to do is we want to see your records, the money coming in, because this is a wholesaler, right? So this is a wholesale company. So they deal with cash. They deal with cash, right? So now we want to track. So now we go back 1 year. Yes. We don't know where it started, right? We don't know where things started going. So we need to go back in history. Yes, we're going to go back in time. We want to see what went wrong. What went wrong with this business to get this business from a very successful business, doing very, very well, to getting to this point now where they're close to filing for bankruptcy and putting their staff on. We need to figure out what went wrong. So we go and we track the money and we track the records. Right? We track the records. So now it tells a story. This is the thing with records. It tells a story. If we're able to see the money, this is the money that's coming in. This is the money that came in these months. But now these 7-8 months, there's something different. There's something different happening. What is happening in this month? There's money going, there's money coming, going out, there's money coming in, but there's a lot more. There's a lot more money going out, and there's not enough coming in. What is happening? What is happening? There's something wrong here. And we track everything. Listen, we track every cent going in and every cent going out. And then we figure out, you know what? Why do you owe Cadbury's 2 million rands? Oh, why do you owe Cadbury? Why do you owe Coca-Cola over R1 million? Now we have an account with them, but is that normal? Why do you have that account piling up? Because this is how it works, right? If your money's going out, you sell your products, you pay your accounts, right? You pay your creditors. Those are people you owe money to, because you're selling products, you're making money off it, you need to settle it. Why is this coming out? Why are you creating this debt? Here's the books, you can see, this is your accounts, this is who you owe, this is money coming in. And we go back and we see this. Eventually, listen, after time, and remember, there's a big company with an accountant, full-time employed, not external, an internal accountant. And we figure out, no, what was happening, they were literally, right, boxes and boxes and boxes and boxes of chocolates will be put on trucks, and then the truck come back and they load it up again. Literally, they were stealing from the company. They were stealing from the company tons and tons of products, Coca-Cola, chocolates, you name it, right? So they were spending money on the products, but they weren't selling it, and they weren't paying their creditors. Can we understand how this works? But it's been going on. When we went back and see when this started, years. We eventually checked. We said, let's just go back another 2 years. It's been going on for years with an accountant, an internal accountant, and they didn't pick it up. They didn't pick it up. When we picked it up, it was too late. It was too late, because they were in so much debt. They were in so much debt, right? And this is why this is so important. Even with an accountant, you need to keep track as owners and directors of where the money is going, and track and see. This is a picture that it's painting, right? A picture of numbers, but it's telling you things. I'm spending too much here. We're spending too much on this, right? We're not making money in this department, this department. This is what the numbers are telling you. So your financial statements are there for you to read. Yes, you need to read your financial statements. It needs to tell you, my business is doing well, my business is not doing well, right? I'm spending too much money. I am going to need cash flow later on, because here's the thing. When your business grows, right? When your business grows, there's times where you need more cash in your business, right? You need more cash in your business. You need to expand, you need equipment and machinery, right? But you need to plan a year before for that. It's not something you can do now. Listen, this is what a lot of businesses do. They get stuck, right? Now they have a cash flow problem. Now you want to go to the bank. You want to go to the bank now for finance. But what is financial statements, right? A financial statement takes all the money coming in, right? All the money going out. It looks at your expenses, your monthly expenses, your fixed expenses, your variable expenses, and it determines what your profit is and how much tax you must pay, because you pay tax on profit. So who of you guys that are here likes giving government 32% of your profit, which means if you make 100,000, 32,000 needs to go for tax. Oh, would you like to give 32,000 rands of your hard-earned 100,000 that you made? No, nobody, nobody likes giving money for tax. It's your hard-earned money. So what is your financial statements? It allows you to paint a picture for tax, right? For tax. So that instead of saying, you know what, this is net profit, you know what, we've purchased this equipment, we purchased this machinery, we've invested here, our expenses is a lot this month. Oh, we're not making on paper, we're not making, we didn't make a profit, right? Which means, what is our tax? Our tax is zero. Because people with accountants, people in business don't want to pay tax, and they don't. They don't pay tax, right? So this is the challenge. But now I want finance. It's different now. I want finance now because next year I want finance. But now on your financials, you've painted a picture because you did not want to pay tax. Right? I know I didn't make money, so I don't have to pay tax, right? But now they're saying, oh, but you know what? According to your financials, you know, you're not making any money. So how are you going to pay off a loan, you know, for 10,000 rands if you're not making any money? Can we understand what we say? No, you don't qualify. So you need to plan ahead. You need to know we are expanding. We are expanding now, right? We are expanding. And this is why you need to be liquid. If you need to have cash, right? You need to be able to pull it from your business. So you need to plan ahead, right? You need to plan ahead and you need to read the numbers in your financials to determine when you're going to need that cash, extra cash for growth and expansion, right? So here's some of a quick ratio, and the one that you guys should know and be very familiar is the profitability one, right? The profitability one is the common one because that's the one that we use to determine if we're making a profit, right? How much money is coming in, how much money is going out, what is my fixed cost every month, and what is left, and that is my profit, right? Before I need to give them some of my money to SARS if I need to, right? So that is one that we're clear of. The one that we're not so clear on, right, is liquidity. And this is the equation. It's an equation. And this is when someone wants to apply for a loan or they go for finance, right? This is what they want to, how liquid are you? Right? So you're going to look, and this is the equation that they use. They take assets, they take stock, and they look at current liabilities, people you owe, right? They look at these ratios to determine, right, what is the risk for them as a financer. Yes, they determine what is the risk for them as a financer, and they determine, this is why when you go to the bank, right, they're going to ask you these questions. Right? Because they want to determine what the risk is. And there are so many financial companies out there, right? It's not just banks, right, that has finance. There's government organizations like CIFA, right? They are willing to take additional risk. And their finance is the lowest rate. You won't get finance at a lower rate. Why? Than CIFA, Small Enterprise Financial Agency, because it's government. They're willing to take risk. They're saying, you know what? They're willing to take risk, even if you don't have surety. And what is surety? Assets, current assets, property, something you can put down. They're saying, we're not worried with that. We want to know, do you have a contract? If you want a piece of machinery, right? And you're saying, I need this machine, I need this vehicle, I need this factory. They say, no problem, we will fund it, but do you have work for it? Do you have a contract to say, I need to do this amount of work, I need to deliver this amount of products, I need to deliver this amount of services, right? So they want to know if you have that, they're saying, no, great, we will fund you, and at a very, very low rate, right? So these ratios is very, very important. So you have a debt ratio as well. How indebted are you? So listen, to have some debt is good. You ask me why some debt? Some debt is good. To have some debt is good. If you have no debt, if you have no accounts, and you go for a loan, and you want to apply for a loan, right? Your chances of getting finance or that loan is very, very slim. Why? Because you have no financial history. You have what they call a credit score. If you guys have, you guys should know what your credit score is. So if you search credit score, right, there's free online credit score sheets. You put your ID number in. Your first one is free, so you get your first one for free. So if you don't have your credit score, guys, please go and get your credit score. Right, you can do it this weekend. It's very quick. You go online, you just put in credit score. You see you get one per year, which is great. You don't have to pay for it. So you get your free credit score. It tells you what your scoring is. If it's 800, 900, it will say good, right? If it's low, so when is it low? If you have no accounts. So what do we do? What do we do to get it? You go and get an account. You get an account, right? You get an account, you get a credit card, and you pay it off. This is how you're getting a record. You're showing you have a history of you taking out funding, you're taking an account, and you're paying it off. You're showing I can pay it off. Now you get a credit rating, right? Can we understand how this works? So if you do not have any debt, you're not going to get finance. It's difficult because they don't know. You don't know your history. Are you going to pay it back? Right? So you need to build the credit history. So yes, take that credit card, take that loan, take that account. Right. So remember, it is the credit card, not the debit card that you need. You need a credit card. Credit cards build history. They build records. So you need not the debit card, you need the credit card, right? Your accounts by Markham's, yes, that's an account. That's an account. And when you get it, please, you pay it off on time. Because remember, it works in reverse as well. If you don't pay it, you get a bad record as well. So what you do is, if you need and you have the cash to go and buy that nice jacket. Oh, very nice. No problem. You take an account, right? And you pay that jacket off in 1 month. Yeah, you have the cash, keep the cash, pay the jacket off. What does that show? You took out a loan, boom, you paid it off. No problem, right? It shows that's on your record. That's on your record. So if you do have accounts, you pay it off. Your credit card, same thing, right? You have your credit cards, you take out the finance. If you pay it off and you have a credit card and you take out 10 grand by the end of the month, within 1 month, you pay it back within 1 month, great. And not going to charge you a lot of money. Why? You're paying it off within 1 month, right? Because remember, there's finance involved. The longer you keep the debt, the more they are charging you. So you need to be able to manage your debt. And this is why there's a debt ratio, because some people, yes, it's so easy. Listen, it is so easy to go and get a credit card by the bank, and then you sit with this gold credit card, and now then they have platinum, right? And they say, you know what? You are special. You have a gold credit card. You can get 100,000 rands of credit. And you feel so great because, you know what? I have a platinum card. You understand? But if you're using your cards and you take that card and you go, it is easy to get. You go to another bank and you take it, oh, give me a card. And you go to another, oh, give me a card. And now you sit with all these cards and something happens. And remember what happens in businesses. It goes up, it goes down. And what happens is that credit cards is a trap. Yes, it's a trap. It's a trap. Because now it's so easy. I can just swipe. Choo, choo, 15, no problem. And when you work out the interest rates, because banks need to make money. Yes. And this is where they make money. This is where they make money on credit cards. They love it because they're charging you interest on interest. It's compounded. It's compounded. And if you're late, no problem. No problem. No problem. If you're a few days late, no problem. You know what? They're just going to charge you more and more and more and more. And this is how it escalates and escalates. And then you take one credit card to pay off another one. It's an endless cycle. Guys, please be careful of debt. Be careful of debt. Be careful of debt. It is a trap. So it's good to have some, but remember, too much is a killer, because that interest rates, then you end up working, but you're working for the banks. This is how it works. And there is finances out there, right? And I need to warn you, there is a lot of finance companies out there that gives you, you'll see, 24 hours credit. They give you 24 hours. You can apply for a loan 24 hours, right? You need to read the fine print on those agreements with those finances, right? Equity finance, there's many equity finance. So they will give you finance upfront quickly. No surety, no surety. But when you look at the rates that they're charging, they are charging you per day. Per day. It is short-term finance. In other words, you get a contract. You get a contract, right? I need to deliver this contract, right? I must supply 100 laptops. I get finance, buy the 100 laptops. I sell it. There's my contract to supply. I take my profit and I square my debt immediately. That's how it works. It's short-term finance. If you do not pay it on that time, they charge you interest per day compounded. Guys, then you end up, whatever profit you're making is gone. It's gone. And then they have clauses in there. They have clauses in those contracts that takes equity of your business. Yes. Yes, guys. We have and we deal with this. People come to us all the time, They come to us, they say, you know what, we have this problem. This is what happened. We were in this situation. We needed the finance. We took the finance. They gave it to us quick. And now we're sitting in this situation. We're losing our business because of it, because of a delay in payment here. What must we do? What must we do? You've read the documents, you've read the agreements, and you have signed it. You have signed it. These companies has the best attorneys that money can buy. You understand? But if you sign and you're not clear on the risk that you are taking, there's nothing anyone can do, right? So you guys need to be very, very careful, right, on the finance that you are taking, and the finance and there's loads of them. It's loads of finance. You just Google quick finance on Google and you will see there's lots of them that's there, right? If you are not ready for finance, don't take finance. Don't take finance. You need to be aware of the cost that's involved in your business, right? And you need to be aware of the risks that's involved, right? And let me tell you, it's not worth it. It's not worth it taking those risks in your business. Okay. So you're having those accounts, you are reviewing your documents every 2 months. Every 2 months, you're going to review your income and expenses. You're going to see what has changed, because from month to month, simple things like cost. If you know that for this month, And I remember one of the and I use this example, one of the companies, right, they do garden maintenance. So they have buckies that goes out and cuts grass. That's what they do. But they have about 7 or 8 buckies that goes out, and now they go and cut grass. Simple. Simple. They go and cut grass. So now, after 2 or 3 months, right, they're doing well. Their finance is not looking good. They're struggling with cash flow because remember, different industries, your markups for different industries is different. If you are in ICT, right, and you're selling hardware and software, your markups is 300-400%. Yes, it's high because it's higher risk industry, technology, tech industries. Your markups are high. If you are doing work for government and you're cutting grass and trees, government's budget, very high, 350 million, right, on just cutting trees and grass. So, but your markups on there, as you charge per square meter, it comes down to cents. Cents. That determines who gets it. Your markups are small. Your markups are small. So you need to keep track of every little expense in your business. If you are not, you're not making money. You're not making money. So every month you need to check, what is my expenses? What is my expenses on fuel? And this is what he did. Right? After 3 months, we went back and we seen, why is this company not making back? And we tracked something simple, fuel for buckies, maintenance. And we put a tracker. We put trackers on the vehicles. We seen, the 7 vehicles was coming in late every day, because now we can see they're coming in late. Right? And in the middle of the night, the vehicles is moving around. It's like, ow. The vehicles should be parked by the driver's house. In the middle of the night, the vehicles are moving. The vehicles is moving around at night, right? They're coming an hour late in the morning, and they leave an hour early. Just that small things. It's small things, right? That it's easy to overlook those things. But when we looked at what it cost the company, when we look at what's on average for the year, 1.2 million rands. 1.2 million rands. It costs time, not working, labor costs, coming in work late, all the staff in the buckies that was in there, because remember, this guy had to pick up all the staff and they need to be working at that time. Hour lost from everyone, fuel costs, maintenance costs, tires, all of those things, all of those costs came into effect, right? 1.2 million rands. That's overlooked. Can we understand how it works? You need to keep your eye on these things, or it's gonna eat into your profits. And then at the end of the month, everyone is working, but you're not making money. And we mention this all the time. When we do our costing, we used to do costing and pricing and costing for the city, right? We mention it all the time. We are in business, right, to make money, not to be busy, because people think we're busy, we're making money. It's not always the case. Sometimes we're very, very busy, but we're not making money. We're just busy, right? So we are not in business to be busy. We need to be making money, okay? We need to be making money, investing and growing, right? So we're using financial data to guide, and we also using it to expand. Because look, if you're in business for 3 years or 5 years or 10 years, you should be moving. You cannot stay in the same place for 1 or 2 years. No, there need to be expansion. There need to be expansion and growth. And what does that mean? When I say expansion and growth, right? If you look at where you are now, right? You're running your business, right? You're involved with it. So if you were to take yourself, this is what I want you to do. Take yourself and say, fine, right now, if something were to happen to you right now, in other words, you cannot do anything. You're gone. Take yourself out of your business right now. What happens to your business? right? That's a simple question. So you just take yourself out of your business right now. What happens to your business? So if the answer is my business stops, then you have a problem. Because what is a business? A business is a money machine, right? It's a machine that makes money, right? So if you take yourself out of the business, right, and your business don't operate without you, then you don't have a machine. Then it's more like a job. Can we understand the difference, right? Which means that when you're growing, when you're starting, you're involved with everything in your business. Why? Because you need to figure everything out. You cannot leave it up to someone else to figure out what your business is. You cannot leave it up to someone else, to figure out, what is your value proposition? What is it that you do different to everyone else, right? You cannot leave that up to someone else. That is what you need to do in your business. You cannot let someone else figure out how to make your business profitable. You need to figure out how to make your business profitable, right? You need to figure out where you are and where you need to be. That is your job. But once you have figured that out, your next job would be to start moving yourself out of that business and putting people in the business that can do the things you do and do it well. Can we understand that? So what does that mean? That means you're going to need more money. Why? Because you never get to that point where you're like, I have more than enough money for everything. I can just do whatever I want. No, you always have too little money, because this is what growth and expansion is. This is what it is. It is risk. And there is always risk. You need to understand the risk. This is the key thing. And this is what your financial data does. It allows you to understand the risk that you are taking, but you're going to have to take the risk at some point. This is how you grow and expand. So you need to have that operation manager. You need to have that CEO. You need to have that staff. And it costs money, which means you're going to plan ahead to say, you know what, this is how much money I'm going to need. Not this is what I need now. You're planning ahead. You say, next year, this time, I need to have another 3 people in this organization. Why? Because our targets are now not this. This is our targets. It's not 1 mil, it's 10 mil. Right. It's now not 1 mil, it is 10 mil. And in order to get 10 mil, I need more people to get to 10 mil. And I need people that is going to help me get it. That's going to help me get that 10 mil. I need these people. And this is what it's going to cost me to get those people that's going to help me get this target. Right. This is what it's going to cost me. I can budget here. I can save some money there. Right. This is how I can get this budget to get these people that's going to get me to my next budget. Can we understand how that works? That is financial planning. This is what I'm going to need. I can pay their salaries for 3 months. That's it. 3 months. I can pay their salaries. I have enough to pay their salaries for 3 months. After 3 months, these staff has a target. They need to do this and this and this. They need to help me get these other contracts, right? They need to help me improve efficiency and performance within my business. They need to help me save this costs, right? So that I can pay their salaries after 3 months. If they're not, then you don't have the right person, right? Because this is how you grow. This is how you grow after time. And you have people in your business that can run the business. And if you decide, you know what, I'm going to take a holiday, your business carries on without you. Now you have a business. Can we see how it works, right? But there need to be a very, very, very clear understanding of what it's going to cost, right? How much money you're going to. So you need to see into the future, and you need to look back. You need to look back, right, at the costs, right, at the costs and the money coming in within your business. Okay, so it is important when you are looking at and we say, let's say, for example, you were to come to me and say, you know what, I want to sell my business. So you come to me and you say, you know what, I want to sell my business, right? So what am I going to do, right? If I look at a business, what determines the value? The value of it. So the first thing I want to know is it profitable? Give me your financials, right? Give me your financials, right? The next thing I want to see is, I want to see your business plan. In other words, I want to see what your plan was, and I want to see the growth from year 1 to year 2 to year 3, because I want to see how their business has actually grown. I also want to see where the money has gone. Yes, I want to see where the money has gone. And that is what your financials tells me. It tells me, it tells me I spent money on marketing to build my brand. It's in your financials. It tells me that this company has spent X amount of money on marketing. It spent X amount of money on sales. It spent X amount of money on business processes and systems, on equipment. It has so much assets. This is the assets of the business. This is how the income has varied from 1 month to 1, 2 to month 3. It has increased. This is how much clients they have. All of that information I get from your financials, right? So you paint a picture. It paints a picture of your business to determine what it's worth, what your business is worth, right? And that determines, and what are the things that determines? Yes, your profit determines what it's worth. A combination of profit, a combination of clients, how many clients knows who you are and what it is that you do, right? Sales, what is the sales? Very, very important. And your brand. If I see a business, and I see no money's gone in, I see your financials and I see nothing, no marketing. This company doesn't do marketing, right? It's an important part of a business because it builds your brand. Because when I buy a company, I buy a brand. I'm buying a brand. If I say Bidvest, I mean, you guys know Bidvest. You're not a client to Bidvest, but you know this is Bidvest. So I'm buying brands. So I want to know, hey, has this company invested in marketing and building these brands? How have they invested in building and marketing the brand? Right. So I get all of that information from the money that was spent. Right. How did you spend that money? What did you invest in over the last few years? All of that I get from my financials. And if I'm gonna invest and say, you know what, I want the 30% share, and I'm gonna give you money, right? Oh, what's gonna happen next year? Next year, I want your finance. I want to see the finances because I want to know my 30%. What is my return on my 30%? And how are you managing the money that I gave you, that I invested into your business? It is very, very important when you take on stakeholders and you bring people into your business to make sure that you are keeping track of every single cent. What went wrong and why? This is the key thing about when you're analyzing your financials. You need to figure out what went wrong. Why is there no money left? Right? We got work, we got contracts, but there is nothing left. You need to be able to go back and track, where has the money gone? You understand? Because you need to make important decisions. You know what? We're doing catering, but we are making the muffins. We are making everything that we need, but it might actually be cheaper to go and buy the muffins ready made. You understand? We are doing consulting and we do this ourselves and we do these things ourselves, but it might actually be cheaper to get someone external and outsource that function. Yes, it might be easier to outsource that function to someone else if it is easier, instead of us having to have a department, right? And I'll give a simple example. A company, what it does is they actually manufacture burgers. So they make burgers, So they do a lot of the things themselves. So now we come and we see, they have so much staff, they have so much equipment, like maintenance, maintaining a production line. Oh, it is a big job. The amount of equipment and machinery you need and staff that you need to maintain it. Right. Something simple, like you might think it's simple, like if you're making these burgers, something like just the crumbs. Just listen, just the crumbs that goes on the burger. Right. If you were to make that, right, it takes a lot of people just to come and make that separate thing. What is it going to cost? And when they did the calculation, of what is actually costing them. Right. They looked at all the expenses. They looked at all the machinery that is needed to maintain those machinery. You need another whole warehouse just to produce it. It is not viable. It's not viable. It's not viable. It's not profitable. It is easier to buy it ready-made product. It is easier to say, you know what, if a machine breaks, you can come in and fix it. It is cheaper for us for you to come and fix it when it breaks and give us a charge and a rate to fix it than for us to keep 12 people to come and maintain this, and the equipment and stuff that we need to do it. We need another warehouse. What is the cost of that warehouse? This is the type of decisions that you're going to make within your business. You need to keep track of that because it is very, very important decisions that you're making as you are growing. You need to reduce costs, put time, energy, and money into the areas that is the most profitable for you. Yes, you need to say, I offer all of these things. I offer all of these things. Right? And these are decisions. So now when we looked at this company, we went to them and say, you know what do you do? Well, we offer this burgers. We also make this little nuggets, and we do these little funny shaped people that kids like to eat. And we have all of these. We have 30 different types of products. I said, you know what? That's great. How much of those products are you selling? What does it cost to produce those other alternative products? What is your best seller? No, these burgers sell. We sell 90%. So now we're saying, fine. These are the products that's bringing the business, bringing the money in. These are the contracts that bring in. What is it costing you for all these other things that you're doing? And how many contracts are you getting for that? How many are you supplying of that? Oh, no, hardly any. You understand? What is the waste? What is the waste? It's very difficult to make these things, right? If we look at the waste, something so simple. We went to a company, all we did, we just looked at waste, how much they are wasting, and we put a cost on it. Listen, it's scary. It is scary. When we gave them the stats on wastage, how much you actually waste, how much they wasted in their business. Scary. Millions, it's millions, right? You have to keep track of everything within the business, and you need to make decisions that's best for you. Cut those things. We said cut. Don't do it. I know that you want to diversify. We're saying you're losing money. The profit from that product, your profit from that product is going into that product. It's what's happening. The profit from there is going there. You're making no money. It's a choice you need to make. You need to cut those things. You need to cut those things. Stop doing that. Get people to do that. It's not profitable for you, right? These are the decisions that you need to make. No one can make it for you. You cannot ask an accountant to make decisions like this in your business. No, it's your business. You must make those decisions. This is what determines how quickly you grow. No one can make it for you. You must make the decisions. You need to keep an eye on it. And this is why it is so important when you look at most businesses. They spend the majority of their time in operations. Most businesses do this. They spend their time in operations. Why? Because the work must get done, right? So this is what happens. They spend their time in operations because we need to get this job done. So now I need to get involved in getting the job done, right? I'm the director, I'm the owner, but I need to help get this job done. So I'm spending my time in there and it's taking up all my time. And what happens is when we look at all the finances and the money and see where the money is going, that just doesn't get done. So like no one is doing that, right? No one is doing that. And then we get into the situations that I've just mentioned. Problems, 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 risk, right? Companies falling flat, because there's no one there. So we're saying this is very, very important. You need to put and allocate time to say, fine, I'm going to look at these numbers. I am assessing these risks. You cannot say my accountant is doing it. You cannot say this person is doing it. You're going to figure out this. You're going to look at the numbers. You determine your risk and you make decisions based on the numbers. Okay. Bad actors, because when we look at companies, right? Normally companies, when you expand, you have different departments. So you have a finance department, you have a marketing department, you have a sales department, you have an HR department, all different departments. Why do you think they do this? Why do you think when you grow, you break up into departments? Why? Because each department sits with a budget. This is what separates departments. Budget. You allocate. This is the amount of money I'm giving. This is my budget. This is my budget. You doing marketing, right? You in charge of marketing. Your budget is 5,000 rands, is 20,000 rands, is 50,000 rands a month, or whatever. This is your budget. You're going to spend that budget, and this is your targets. This is your outcomes. This is your KPIs. This is what I'm going to measure you. Your job is to build this brand from here and to there. That's your job. I'm giving you a budget to do that. You in charge of sales. Your job is to build our client base from 2,000 to 50,000. I'm using as an example. You in charge of HR. Your job is to make sure we have the right people in the right roles doing their job and performing at 100%. This is your job. We're giving you a budget to do that. You're going to do training. You're going to do skills. You're going to make sure you're accessing mandatory and discretionary grants from government and tax incentives that government gives you. Your job is to do all of those things. You're going to save us money. Right, you're going to save us money. And all of those things are available for you, right, that you can access. You need to put those things in place, KPIs, and you're going to measure, and very, very clear, documented process with clear KPIs, but it's linked to a budget. If your budget is spent and your job is done, you did your job. You reach your target. And then what happens next year? New budget, new target. This is how it works. This is how it works. And you need to determine departments. You know what? You're not doing your job. We gave you a budget for marketing. It hasn't increased. We gave you a budget for HR. We're not performing. We're not performing. We're still wasting. Right? We're not performing. We can do more. We're doing 10,000 units. We can do 20,000 units with the same staff, because when we look at productivity on average in South Africa, people work at 40% of their capacity. Facts. 40% on average. People work at 40% of their capacity. If you compare us to Germany, to China, that is, China's in the high 90s. 90s. They're working at full capacity. In South Africa, people are working at 40%. Imagine it. You're having staff, but you're only getting 40% out of them because they're not managed effectively. They're not managed effectively. You can effectively double what you're doing, double the amount of work, double the amount of outcomes that you are doing by managing staff effectively. Right, this is what we're saying. So if you have people that's in HR that's doing this, performance, contracts, agreements, you have people doing that, that's your job. Your job is to get 100%. And I'm explaining that we are And we're working at 40%, right? We're working at 40%. So imagine you can do twice as much with the people that you have, twice as much, right? When we looked at these companies, that's the first thing we asked them. It's the first thing we asked them. If you're in services or you're in production, you're in manufacturing, it doesn't matter. We asked them a question. We asked them, with your current staff, with your current equipment, right? Currently, everything that you have currently, at what capacity are you operating? That is the question that we asked them. That is the question. So if I were to ask you that question, at which capacity are you currently operating with your current staff, current equipment, everything that you have currently? What are you able to do? It is not an easy question, right? But if you answer that question correctly, remember, if I spend some time in your business, I can tell you exactly, because remember, if I look at your numbers, if I look at your staff, right, if I see where your money is going, if I look at your assets and all of those things in your documents, you're going to give me the documents, right? And I'll look at those documents. I'll be able to tell you immediately what percentage, right? But remember, I want to hear what you say. I want to hear what you say, because that tells me a lot. That tells me how well you know your business and how well you know the numbers, right? How well you know the numbers and how well you know your business. And most people don't. Most people don't, right? So that tells me where you are and what you need to do. And if you say, well, you're working at 30% or 40%, you have huge opportunity for growing without spending any more money on building capacity. You don't need any more stuff, right? Because you need to be operating at 100% first. You can't buy equipment. You can't buy machinery. You can't do anything. You can't do anything unless you're operating at 100% first. And most people are not. Most people are not. You're not operating. So if you're thinking of taking out loans, taking out funding, you need funding for this, no. What percentage are you on? If you are not on 100%, don't even think about it. You don't need it. You don't need it. You first need to get up to 100% with the equipment, machinery, staff that you have. When you have that, great. Now we can talk. Right? Now we can talk. Because in whatever else you're going to be putting in, it's now going to be creating more. You're now creating more. You need to be bursting. You need to be bursting at the seams, but you need to know where. You see, because this is what it does, right? If you're bursting at the seams, so imagine it's like a balloon, you're blowing it up, it's going to expand, right? So what happens when you're operating on 100%? This is what happens. This is what happens. If you're operating on 100% and now you're going to try and push it to 110, what's going to happen? What's going to happen? I'll tell you what's going to happen. You're going to start bursting at the seams. You're going to start bursting at the seams. Like we can't in this area here. We're bursting. We need assistance. That is what you need to know. That is what you need to know. You need to know where you're bursting at the seams. Why? Because you need to know where to put the money that you're going to get. You need to put it in the right place, but you need to close the hole. Can we understand? You need to close the hole. So you need to first know where the hole is. So you're going to put it in the wrong area, right? And we see this so many times. You know what I'm saying? And we've seen companies, you know what, we're expanding now. We're expanding, we're growing. You know, we got this contract. So what are we going to do? You know what? We're going to spend 2 million rand. We're going to need that machine. Are we going to need this? Are we going to need this? We're going to need this, and we're going to go crazy. Why? Because we got this contract now. You understand? I said, where are you putting it? Why are you doing that? Why are you putting the money there? Why are you buying the machine? Give me a reason. Show me why. Explain to me why. Right? Because if you are operating at 100%, I want to know where the leaks is. I want to know where you're leaking. Where is the leak? Show me on paper where the leak is. Then I can justify to say, you know what, you're justified by putting the money there. because when people ask for finance, it's the first thing they ask now. You can't get finance unless they know what it's for. So that's the first question they're going to ask you. They're going to ask you, what do you need it for? You say you need finance. Okay, great. What are you going to do with it? I'm going to do this and this and this. And guess the next question, they're going to, okay, give me your finance. So what are they looking for? They're looking for the leaks. They're looking for, they're going to sit, they're going to talk with you, they're going to identify, they know what the leak is. If you're going to be putting their money somewhere else and you're not covering the leak, you're not getting the finance. Can we understand? You need to know where you're going to leak, and you only do that when you grow. Can we understand? I hope I am clear. I talk very fast. Can I just see if there's any questions before I move on? I didn't even see if there's any questions. Is there any questions? I'm going to go quickly through, see if there's any questions that you guys have. Let me just check. No questions. Great. Great. No questions. I'm going to move on. Okay, if you have a question, you can put a question in the chat. There's a chat box and there's a Q&A. You can type your question there. I will give you time at the end to ask your questions. So if you do have questions, I will answer them for you. Okay. So this is what we've gone through. So we've gone through assessing using the financials. Remember, you're going to determine in all these areas, keeping track of your income, expenses, your assets and liabilities, people that you owe money to, right? People that you owe money to. So remember now, the purpose of that, you're planning. Right, you're planning for the future, and this is the challenge we find. We do a lot of work for the city. So you guys, some of you that know, we run the programs on how to do business for the city of Cape Town. We've been doing it for 3 years, right? We go into community, so we do a lot of work with the city of Cape Town, right? One of the biggest challenges that we have is companies come in when they're doing work with the city, and they come in so low. They come in so low. So as the city doesn't have a choice. If you're coming in low, your price, remember, most of the bids is based on price. If you're the lowest, you're number one, your chances of you getting it is very good, but you come in so low, right? And remember, if contracts is for 1 year, your price is fixed for 1 year. Your price is fixed for 1 year. Right? And when they do their costing, here's the challenge. This is what they do, right? They do their costing based on where they are now. They base their costing, but remember, you're doing your cost. You need to do your costing on where you want to be, because what happens? What happens? You get a contract to do garden maintenance for the city. Remember, the budgets are big. Or you get a contract, and this is what happened. This is what happened. Right? We work with a company, got a contract to do tire repair, to fix tires, Right? So the city has over 40,000 vehicles. Oh yes, 40,000 vehicles. If they get stuck, you go and fix it on the road. You fix it, guy can go. Right, so that's your job. So now, nice contract. Ooh, millions, with millions. Gave a costing, fixed for 3 years. Fixed for 3 years. Year one, great. Year one, doing great. So what he had to do? Did he have enough vehicles? No, didn't have enough vehicles. Did he have enough premises to keep the vehicles? No. Did he have enough staff? No. Because remember, this contract, he wasn't able to deliver the contract with his current capacity. He had to increase capacity. Yeah. And with that comes increase in cost, running costs, maintenance cost, right? Fuel cost, everything increase. Management costs, now you need to manage staff, right? All of those things just increased, everything increased. And with all of those things comes cost. Everything costs money. Everything costs money. But those things change. But what doesn't change is your cost, your total, the amount that you quoted, that doesn't change. So now you have a problem. Your quoted amount doesn't change, it's fixed. Yet your costing is changing every month. Year 1 to year 2. Year 1, fine, making some money. Year 2, not making money. Year 3, losing money, bankrupt. This is it, guys. This is how it works. Year 3, bankrupt. Now you ask yourself, how is this possible? How is it possible that a company is sitting in a multi-million rand contract, but it's bankrupt? It's bankrupt because you need to look ahead. You need to look ahead. You need to look ahead and do your costing projections, cash flow projections. You need to know, you need to do your costing from the future. Yes, I have these project managers, I have these people, I have these vehicles. This is what's going to cost me, not based on your current cost. And you're going to factor in risk. If I burst here at the seams or I burst here at the seams, it's going to cost me X amount to fix. And this is what it's going to cost me. And all of those costs is going to be on my quoted amount. You factor the risk in. And if you need to escalate your cost, then you escalate your cost. You say, year 1, I charge this. Year 2, I charge this. Year 3, I charge this. But you factor those costs in based on your experience in your business. If you are clear on the numbers and costs, you factored it in because you need to take the risk. But the city's saying you need to make a profit. The city can't determine. The city don't know what your cost is and some other company's cost. They don't know what your variable cost is. They don't know what your fixed cost is. They don't know what your running cost is. They don't know what your break-even cost is. They don't know that. You know it. So you assess your risk. You give your costing and you take the look at the risk going forward in your business. Okay. And remember, it's always planning. You're planning ahead. You're planning ahead. And I always say, people that go for finance, you don't go for finance you don't look for finance when you need it. Yes. You go up front. You need to go to all the funding companies that offers funding. You go to CIFA, you go to NEF, right? You go to your different banks. You go and you ask them, what is available? What is it costing me? What is it costing me? What do I need? What is the criteria for applying? Right? Because there's different types of funding. There's grant funding. There's partnership funding. There's co-funding. You, DTI, IDC, you cover half, we cover half. Right? But you need to know. You need to know what is it that you need, how long it's going to take for them to get the finance. You need to go up front. You need to go now, not when you need it. Otherwise, you're going to be desperate. You're going to be desperate. And you cannot go looking for finance when you are desperate. Okay, then it's problems. You're going to settle. You're going to settle and you're going to fall into traps. You're going to fall into traps. Okay, so you guys need to be careful of the funding that is available, right? We've seen lots and lots of businesses. They fall flat. And remember, if you take on an equity funding, it's equity. They're taking a share. If you don't pay them back, they get a share of your business. Guys, it's forever. It's forever. This is the thing with equity. If you can't pay a loan and someone gets an equity share, 30%, that's 30% forever. 5-10 years, you're doubling, tripling what you're doing now. You're giving 30% away. Guys, it's forever. It's forever. So please, guys, be careful. Be careful of the funding that's available, right? So your statements and accounts, these are the things. These are the things that you're going to keep track on. Remember now, whether you have an accountant or not, there is simple software. Right, there's Pastel software, there's Zoho for you guys, right? Zoho, Z-O-H-O, Zoho, so nice. And it's when you look at the cost, guys, even if you're a small business, right? If you look at the cost of the Zoho platforms, it's a small amount of, it's a small cost. It's a small cost, but it's a cost of doing business and what it allows you to do, right? If you look at the functionality it gives you the ability to do your invoices, do your cash books online, customize your platforms, nice, easy, and professional, right? Pastel expensive. So Pastel is quite expensive. Accountants use it. So your choice is either you're going to use an accountant that is using Pastel to do all of your books and statements. And the advantage of that is if we look at cost, yes, the advantage is every month, if you're submitting your statements, your accountant is doing it, he's doing your VAT every 2 months. When you do and you're putting all of that information from the start into Pastel or into Zoho, when it comes time for doing your annual returns, it's just a press of a button. Why? Because every month, the way that you're collecting your data, right, is in a way that allows the system to pull information and reports within a few seconds. It's easy to pull it. It's easy to pull the data. If you are collecting your data in the correct way from the start. So you do that, right? But if you're going to appoint someone, okay, great, I haven't done anything. My information is all mixed up. It's in documents or it's in a little box. It's going to cost you a lot of money. It's going to cost you a lot of money to actually do that. So we have an accountant. He does our books, all of those things. But when I need an annual, it doesn't even charge me for it. Why? Because he's literally just pulling a statement from the system. It makes it easier if you're doing things in the right way every month. Right. Every month you're doing it in the right way. Every month you're putting it into a system that can do analysis for you. These are nice things with systems. It does analysis for you. You can put alerts. You can put alerts. You know what? If this go below this amount, it gives me a little beep. It gives me a little email. You know what? Something here and this needs my attention. Right? It allows you to customize that, and you can do it in a very short space of time, right? And this is a nice thing, right? When you're using the software and you have an account, if you don't know, you get someone to help you set it up. You pay for it. It's worth it. Why? They're going to come and set it up nicely, customize it for you, right? Customize the platforms for you that allows you to see and track the data and the processes within your business and see the costs. So I would suggest if you do a nice course on it, you do a course yourself so you can understand in a little, remember, we're giving you very little information in this course, but we obviously can't go into detail, but there is information online. Listen, there's YouTube videos on anything. You can go on YouTube and watch a few videos on how to do it. It is not difficult. The information is actually there for you to use, right? So there is no one size fits all, right? When we go into businesses, right, and we look at financial planning, even if you're in the same industries, we can't decide what is the best approach for you, what is low risk for you. It is unique, right? It is unique, and it depends on what it is that you want to earn as profit. You need to put an actual figure, an actual figure, right? On what it is that you want to get out of your business as clear income for yourself, profit. What do you want to get out of your business within 2 to 3 years? You need to put a number there. You need to put a number. It is a number out. You need to put a number down on paper so that you can see it, and you're going to work towards that figure. You're going to work towards that figure, right? And it's important to do that, right, when you're in business, because if you get a job, you agree up front, isn't it? You can't go into a job and say, you know what, I'm going to work for you, but we'll see what you can pay me. Does it work like that? You're going to see what you can pay me. If you can pay me something, you'll see. No, it doesn't work like that. If you go, you're going to go work for a company, and someone's going to give you a job. You need to know up front. You know what? I'm getting X amount. I'm getting 50,000 a month. That's what I'm going to get from my very first month. You're going to pay me that. Great. Now you go in. Same with the business. You need to know in 2 years, I need 100,000 that I can make, that I can take out of my business. After all my expenses is paid, I want 100,000. That's it. That's your plan. That's what you want. You agree up front. You make a decision, you put it down on paper. Why? Because you don't do this when you get a job. So why are you doing it in a business? You put it down on paper. This is the target. You want 100,000 a month, 1.2 million. That's it. That's what you want for the year. That's what you need to make. That's your target. And that's what you're going to now evaluate every single month. How much money is going in? How much coming out? Am I working towards that? Because you're going to break it down into months. You're going to break it down into months. You're going to break it down into days. Because what am I doing today? This is if you say, and I go into a business and I see, I need to know, what is your plan? How much is it that you plan to earn? What did you earn last year? And what is your plan for next year? Great. You give me your figures. I want to know what it is. We're sitting around the table now. You need to tell me because you're the boss. Tell me what your figures are. Okay, great. This is what my figures is. I want to make this. Okay, great. So give me your financials. Give me your documents. Show me where the money's going. Show me where the money's going for this month. Why? Why do I want for this month? Right, it's the end of the month now. The month is done. You can give me this month. You can give me last month. Show me where the money's gone. And show me how much money you're making, because I want to break it down into the month and I want to break it down into days, because you would know you need to make X amount per day, X amount per month, right? And what is your expenses, right? What is the money going in and what is the money going out? And how far you on reaching that, right? I need to figure all of that out, but it starts with the amount. So you need to put it down on paper, black and white. This is what you're targeting. It's a clear plan that you have on how you're going to achieve it, right? And a clear financial plan, what it's going to cost. Yes. What is it going to cost? If I need more people, if I need more equipment, if I need more machinery, if I need this accreditation, I need that accreditation, I need this certificate, I need these compliance, whatever it is that you need is a cost. Everything costs money. So how have I planned for it? How did I plan to achieve that? It's down on paper. And now you start. Now you start. Can we understand how that works? Now you start. But you have to have the goal. You have to have that goal to say, this is what we plan to do, right? This is what we planned. We planned to kick that goal. We were targeting 5 million, right? And then if we don't achieve it, what are we going to do? Let's give up. We're never going to get this 5 mil. Let's just stop here. No. We're going to go back to last year. We're going to say, fine. We're going to go back to the beginning of the year. We say, you know what? We targeted 5 mil. Our target was 5 mil. We needed to make 5 mil. We didn't. We made 3 mil. Where did we go wrong? You sit with your financials. You sit with your expenses. You sit with your plan, your financial plan, your marketing plan, your operational plan of what you plan to do. You sit with their documents around the table with everyone that is responsible for those different things. You sit around a table and you're going to have a very simple discussion. Great. What did we do there? What did it cost? This was the plan. What did we do? What did it cost? What worked? What didn't work? Why didn't it work? What are we going to do differently? That's the discussion we're going to have, right? But in all of those things, the cost comes in, right? Everything we do in business, cost comes in. It's a very, very important. So we need to understand the numbers because it impacts on everything in our business, right? So we have the discussion on what went wrong. In other words, where was the leaking? Where was the leaks? And we're going to look at what is it going to cost to fix it. Oh, you know what? We can, there's the gap. And this is how you figured it out. You figured it out around the table, right? You discuss it, you get into detail with it, right? And if you're not the person, if you can't do it yourself within your own team, you get the consultant in, come, let's have that discussion. Let's figure this out. Get someone in, and the consultant's going to go through the process of trying to figure things out. And once you figure out, here is the leak. What is it going to cost to fix it? And then you make a decision. You know what? I can patch this leak, or I can fix it properly. It's it. It's how you, it's a, what is it going to cost to patch it? To patch it, I can put a plaster over it, right? I can put a plaster over it. Might not last very long, right? Or I can fix this problem very well. Come break it down. Let's just rebuild this section. Let's rebuild. Let's do it properly. It's gonna last. It's gonna last. Right? What is it gonna cost? What do I need to do to make this happen? And you put it down on paper, and now we go and we do the same thing over again. Can we see? It's a cycle. Can we see? That is the cycle that we're going year after year after year. So if you are in your business for 5 or 10 years, you should be far. Can we understand? If you're going through the right cycle, otherwise you're not going through the cycle correctly, because if you look at where you were, if you're in the same space, then you're not going through the cycles. You're not going through the cycles, because after 5, 10 years, you should be moving. There should be lots and lots of people employed in your business. Remember, this is what it's about. It's about creating those jobs and growth and risk and understanding the risks. This is why that plan needs to be specific. It must be measurable, right? You guys know this. You guys know the SMART goals, right? It needs to be, and you put a time frame, because guys, time just flies. Time is flying. Time is flying. It was just Christmas, and before you know it, it's Christmas again. Isn't it crazy? Isn't it crazy? Time is just flying, which means that you need to slow it down. How do you slow it down? You figure out where every cent is gone. You sit down, you evaluate where you are, you put it in a plan, and you measure and evaluate that plan over time. This is how you slow it down. You slow it down. You put the energy and the time into all the areas, especially the costing, the finances. You're putting time into those areas. Remember, it doesn't matter who does it. Someone needs to do it. So it's the choice you have. Either I'm going to do it. If I'm not good at it, I'm going to get someone to do it, but someone needs to do it. Non-negotiable. Someone needs to do this, right? Non-negotiable, right? It's the part of doing business. Okay. So you need to be able to do the balancing act. Do the balancing act, right? Because remember, when we speak with business, right, we go through different phases. Not everyone wants to grow every year. Not everyone wants to go fast. Not everyone wants to take a risk, right? When you, sometimes you're still figuring things out, right? So you need to determine at which phase are you within your business, right? And you're gonna decide, you're gonna juggle, right? You're gonna juggle year after year, month after month. You're gonna juggle your business, and you need to be doing the juggling, right? You need to do the juggling. In other words, you in control. You don't want the circumstances to control you. You don't want it the other way, right? That is stressful. Listen, it is stressful. It is stressful. It is very stressful. If things come in, I can't pay salaries this month. Wow. I have a contract. I can't deliver on this contract because I cannot buy equipment. I cannot buy materials. It is stressful if you're not in control. So we're saying the more you understand your numbers in your business, the less stressful it is. Because now you know what? I've planned for this. I've planned for this. I know it's coming. And this is what I've done to plan. I've met with these people already. I've met with these, I know what I need. I know what I need to do, right? It lowers your stress by planning, because when it comes to money, hey, it is stressful. It is when you deal with money, it is stressful, right? So you need to understand your numbers in your business, lower your stress, right? And you have a plan, right? You have a plan, and we do understand things don't go according to plan. But if you have that plan, right, and you have things that you're able to do, that you think about around the table, it makes it a lot easier to deal with it, right? As a team and as an organization, right? So you need to have that goal. So hopefully now, guys, I know we've covered a lot. We've covered a lot, right? So I hope you have a plan on where you want to be in 2 to 3 years from now. I hope you guys, if you take the time this weekend, work through the numbers within your business, be clear on where the gaps is in your business, and where the holes is that need to be plugged within your business, right? If you do not have those figures on targets, put it there. And don't be shy. Don't be shy. Don't be shy on putting and saying, you know what, we're doing 1 mil. Let's target for 1.5 mil. Oh, you don't need to be realistic. There is opportunities that is there for you that has never been there before. Funding, ESD contracts, right? Lots and lots of contracts. There's a question. I see there's a question. Let's see. Tembilani, do you have a question, Tembilani? You can unmute. You can ask your question. Go for it. I don't know if you have a question. Go for it. Tembilani, you can ask your question. You can ask your question, Tembilani. No problem. Are you shy? You can unmute yourself if you want, and you can ask if it's a pertinent question. You can wait for the end. It's up to you. Shall we carry on? We carry on. Let me see. No, okay, you don't have a question. No problem. No problem. We carry on. Okay. So we're looking to the future. Remember, we said these are the things that you're going to be doing, and you're going to put your budgets for the future. You're going to look at your risk management, and you're going to be planning. And remember, when we say we plan on paper, we put it on paper so that we have a plan. It doesn't need to be, people think, when you're doing strategic planning and you're doing a strategic plan, executive plan, it needs to be a very thick document. No, listen, easy. You put it on a one-pager. One-pager. Why? It's more important. It's more important that you and your whole team understands what you're going through and what the challenges is and where you're going to need a push from everyone. It's more important the understanding than having a 20, 30-page document, right? So if you're able to put it on a one-pager, wonderful. If there's a question, I think it's Garnet. Garnet, you have a question, you can answer. If you have a question, you can unmute yourself. No problem. You can go for it. Garnet, can you unmute? Ask to unmute. Or is it the old hand? Okay, we're getting on. I see your hands up. Do you have a question, Garnet, or can we carry on? We carry on. Okay. You unmuted, Garnet. Are you there?
It's unmuted.
I can hear you. You can go for it.
Unmuted. Thank you.
Yes.
You can carry on, Ahmed. And thank you. Sorry.
Oh, so you don't have a question?
No, no, thank you. You can carry on. Sorry for my interruption there.
Okay, perfect, perfect. We're carrying on. We're carrying on. Okay.
Thank you.
Yeah. So this is where we're at. Okay. So we look at you guys. Hopefully you've put your goals, right? So remember what we said. You don't have to be realistic, right? But I would like you guys at the end of this week, the weekend coming up, please put a figure on what it is that you would like to achieve, right? Put a figure on turnover, right? You can put a turnover, you can put a profit, whatever the case may be, right? But put a figure there, very, very clear, and it needs to be a number, okay? Once you've started with that number, remember, we need to determine percentage you're operating on. So it takes a little bit of work to figure all of that out, right? But you're going to do it. You're not going to do it alone. You do it with the people around you to determine, at which capacity you're currently at and who you need, right? Who you need to be able to achieve those targets, right? Which is very, very important. Remember, people always think that, I need to have a very, very clear role, task, and pathway, right, to achieve it. So if you say, fine, let's say it's 20 mil, you don't need to know exactly how to get to 20 mil, right? All you need to know is you're going to take the first step, who I need to get it, right? Remember, you need people, right, to get you there. So hopefully you find the right person that knows how to get it, right? With clear objectives, right? To be able to get you there. And this is what you need to focus on. Remember, there need to be a certain amount of risk that you take in a business, right? You're taking risk, right? So people say, but I cannot afford to bring on another person. I can't afford their salaries. When are you gonna, you're never gonna be in a point to say, you know what, I can afford all of these to get as much people as what I need in. I can buy as much equipment as what I'm gonna need. Whatever I can just go and buy it and go crazy. Is that gonna ever happen? It's never, ever gonna happen. It doesn't work that way. That's not how expansion works. There is always risk. Always. You need to understand, right? If you understand the risk and what it is that I need to do, and you're able to take that few steps and know where you want to be, that is it. That is it. The stuff in between, that comes after time. So now you know where to start. You're starting here. You know you need people to assist you to get it. You're going to do a whole lot of things in the middle, and you're going to get to your target. After your first 2 months, you're going to reevaluate. You're not going to wait till the end. You're going to reevaluate now after this month. You're going to evaluate, okay, great, are we on our way? The amount of money that we expected to pay on this, the amount of time that we said it's going to take to actually do this, is it on target? Have we exceeded it? Are we spending more money? Right? What we expected to spend, are we actually doing that? Remember, because we make certain assumptions, because we cannot see into the future, right? So we can't see into the future. So remember, we're making predictions and we're making assumptions, but eventually, after a month, we're going to evaluate. We're going to say, well, was that real? Was it realistic? Right? And then we readjust month after month, right? And we change our plan as we go along. This is what we do, right? But we need to have the target there. So hopefully you guys, by this weekend, it's a nice weekend. Hopefully the sun is very cold in Cape Town today. But hopefully the sun will be out soon. And we have time to go and make this, put your plan and put your number down on paper. And once you have it, you're gonna keep tweaking it. You test it, you see if it works, right? You see if it works. And this is what makes, right? This is what makes businesses grow, multiply over time. You're gonna try, you're gonna test, you're gonna tweak. Yes, you're gonna tweak and change it. You're gonna change it, right? You're gonna find, and this is the wonderful thing. This is the wonderful thing with the internet, right? You're able to research. Listen, before you even do it, you want to do something, you go and research. You type in ChatGPT. It's so wonderful, the technology we have. If you guys haven't used it, right, please register, right, log in, take the free version, ChatGPT. You put in your plan. This is my plan. This is what I want to do. This is my industry. This is my budget. Tell me what the risk is based on research that was done in the sector, because there's companies in your sector that has done similar things, that has learned from those mistakes already. So why do you want to go and have to redo something which someone's made the mistake? Get the lessons from it. Get the lessons from it. Right, so that when you're putting your plan in place, you know this is going to work. Our costing is, is spot on. It's something which can work. So you do your testing, you do your research, and you change your plan. Remember, you need to be as efficient as possible. Right, they're as efficient as possible. We did the same. We used ChatGPT. Before, we used to use consultants to do our analysis. They charge us 3,000 rands an hour. This is what we did. We didn't have ChatGPT. We had to use a consultant. They charges us 3,000 rands an hour, and we need to pay him. You need to pay him for 10 or 20 hours. No problem. That's what we had to do. Now, for free, we can go on ChatGPT and we can do an analysis in less than 20 seconds. For free. For free. Things that we used to spend a lot of money on before, we can do for free now. Can we understand how things has changed? Things has changed. So you need to evaluate every month. Do I need to do this? How can I save costs? Because that's a great way. It's a great way. People say, how do I need funding? You know what? I'll show you how you can create 100,000, 200,000 by improving efficiencies in your business, right? How do you, instead of getting 200,000 rand loan, get a 200,000 rand contract. Great. It's different ways of looking at things, right? And this is how you're going to tweak your plan and tweak your business every month. You're sitting around a table and you discussing that. Right, we're saying realistic, right? Get assurances, and that's where the research comes in, right? That's where the research comes in, right? Knowing your clients, what it is that they want, what they're willing to pay, right? It is very, very important for you guys to be spending time in your industries and specialize. When you specialize, you can charge more. This is how it works. People expect when they get a specialist, they are willing to pay more for products and services. So costing, looking at your costing, looking at what are you charging for your product? That's where you start. How can I improve? How can I improve, get more money into my business? You charge more. How do you charge more? Everything works hand in hand and affects everything else. So you cannot say, you know what, I'm going to charge more for my product, right? I'm going to charge more, and this is how I'm going to make more. If you're not going to improve your marketing and your branding, your quality of your service, and you're not including customer services, and you're not getting feedback from your customers, all of those things needs to be improved, and they all have a cost. This is how it works. You can't get the one and not do the other. So you need to have the very, very clear plan. You know what? This is what I'm going to do. This is our strategy. We want to increase. We have X amount of sales. We're going to increase our costing by 20%, but we're not going to just do that. We're going to check. How can we improve, offer more value? That's what it comes down to. Value. How can we offer more value that will make it easy for someone to spend it? and get more value in return. So you're making something more valuable. You're making it more valuable. How can I do that? Right? So you need to be spending more money on figuring all of that out, right? What is it going to cost for this? What is it going to cost to figure that out? And you're planning for that cost. And remember, someone needs to do it, right? So you're putting it down on paper. And once it's done, you're going to tick all the things off that is done, right? And this means that you're in control. Now you're in control of your business, right? You're in control. You are steering your ship. Can we understand how it works? Now you're steering your ship. Now you're steering your ship, right? You're in control of your finances. You know where you are heading, right? You know what you need. And now you're steering your ship, right? You're not allowing other people to steer it for you. Right. You're not allowing other people to steer it for you because you're busy. You're in the steering. You're steering it. Right. So that's where you need to position yourself in your business. Okay. Okay. What needs to change? What can change? This is the key thing in your business. Right. Is understand there need to be change. There need to be improvement every single day. You cannot be doing, no matter what industry, no matter what business, you cannot be doing the same thing you did last year, this year. You are competing against other businesses. And when you look at improving efficiencies, improving costs, you need to be putting time in because remember, there's no time to waste. There is contracts that's available. Someone is going to take it away from you. There's so much. There's only so much money within the sector. There's so much money within the sector, right? You're going to get a piece of it. But everyone wants a piece of it. Everyone is in business. Everyone wants to make money. So who gets it? Who gets it? Those that is doing what they need to do. Those that is doing what they need to do. Right. Those that is doing what they need to do. Those are the ones, those that are changing fast enough. Right. How can I improve cost? What technology can I use? Right. If I'm using ChatGPT for marketing, how many new clients can I get? Am I using social media marketing campaigns? Am I using tools to bring new clients to me? Right? Am I doing that? What is the cost? You need to figure out this. This is how when I go to a business and I ask them, right? Are you doing social media campaigns? And they said, no. Okay, great. So you need to do the calculation. Remember, this is the calculation that you need to do. So if you're not doing it, if I were to run a campaign on Facebook, right, I get 20,000 people that now knows I'm running a campaign. This is my business. This is what I offer. This is my service. They charge me 250 Rand. This is estimate charge of a campaign. I want to spend 250 Rand. What do I get? So for that, I get 20,000 people. Out of the 20,000 people, all right, 50 of them is going to say, hi, great, and I'll see what you do. Out of them, 5 is going to say, give me a quote. Out of them, 3 is going to say, okay, great, here's my money. Can you do the service or the product for me? Great. So now you're looking at the cost you're spending and you're looking at the return on that investment. How much money is coming in? Great. I have so much new people knows what I do. Wow, how much is that worth? I have so much people that actually gave me money to deliver my services. How much money did I get in? You're looking at that exchange, return on investment, money going out. And if I were to run a campaign on LinkedIn, which is a targeted professional network for business people, professional business people on LinkedIn, if I were to run the campaign on there, you know, they're charging me 800 Rand instead of, 200 to 300 Rand. I'm not getting a reach of 20,000. I'm only getting a reach of 5,000, but I've got 20 contracts through that. Oh, can we see the difference? I don't have so many prospects, but I've got more contracts. I've got more people spending money through a campaign of 800 on LinkedIn. Can we understand how this works? And you're going to run the same thing. Google Ads. You're going to try all the platforms. Why? It's building your brand and it's bringing clients in to your business. You need to weigh those costs. And if you look at if you're spending 300 Rand and you're getting 100,000 Rands of contracts and people are spending 100,000 on your products and services, does it matter what it costs? Does it matter? It's a small amount of money. What does it cost to list my product on Takealot? So I'm offering products, I'm doing this, I'm manufacturing this, and what does it cost to list my products on Takealot? Oh, they take 30%. Does it matter if they take 30%? Because I can increase my cost by 30%. And what does it cost to market my product? To have a marketing manager, to have a sales manager. What does it cost to store? Because Takealot stores my product. So you go and you store it by Takealot. They do the storing, they do the logistics, they do the sales, they do the transport, everything. They do the invoicing. What is it costing me? What is it costing me? If I were to do all of those things that and you do your calculation, you know what? It's actually costing me more than 30%. Oh, so it's actually better for me to have it listed on Takealot. Ah, and I'm making more money and I can focus my energy on areas, on operation. I don't have to worry. I can focus my energy there. And all I need to do is keep track of the stock. They want 20,000 units. Make sure they have 20,000 units. And that's all I need to do. Can we understand that it's informed decisions that you're making based on cost? Can we understand how it works? You're making those decisions. Marketing, sales, partnerships. How do you making all those decisions based on rands and cents, right? So who else is going to make it? You need to make those decisions. You need to make those decisions, right? On what is the cost? And we look at businesses. Listen, my son's friend, he goes to China. The guy is 21. 21. He said, oh, he wants to travel, but he goes to China, right? He purchases the products there, cheap products for cheap. Lists it on Takealot, right? They ship it from China to the warehouse at Takealot. Yeah. And he just sells, these people buys everything, any stupid thing. And people just buy things. They buy things. Yes, it took him time to research the products, what people is buying. Yes, it took him time to go there. And what is the cost? What is the cost of me getting there? Right? What can I sell it for? What is people willing to pay for it? Yes, what is my profit margins on it? Did the calculation. Listen, millions. What does he do? Is it work that he needs to do? Millions every month. He doesn't do anything. He did the work up front. And his people selling it, logistics, everything is done to Takealot. Right? Can we understand how this works? You need to do the calculations on paper. You need to have the plan work out. Yeah, you know what? It's going to cost me X amount to get a plane, to get on a plane, to go and see these people, I need to, this is what I want. What was his figure? His figure was R1 million a month. He said, how am I going to make R1 million a month? how am I going to make R1 million a month? This is what he wanted. He wanted to make R1 million. Oh, I need to sell how many products? Can I sell so much products? I can't sell it. It's going to take me a long time to sell that amount of products. But you know what? They can sell it. Do I need a warehouse? I need an X amount of warehouse if I need it. But do I need a warehouse? They have a warehouse. Oh, great. But I need to get the products at a very, very cheap price. Right? So how am I going to get it? I cannot get it at a very, very cheap price. I need to be there. because Chinese people don't negotiate via phone or Zoom. They want to speak to you in person. So what do I need to do to get it? It's the most important thing for me. I need to get it at a very, very, very cheap price. So how do I do that? If that is the most important thing for me, I need to be there. What is it going to cost me to get there? Great. What do I need to get there? Can I borrow money? Yeah. I just need to get there. Great. What is the agreement? I need to speak to that company. I need to speak to take a look. I need to understand the terms. What is it going to cost me? Time. Can we understand? It's decisions. You're making those decisions, right? You're assessing the risk. What is it going to cost me, right? This is what you do as entrepreneurs. And as entrepreneurs, you start with the figure, right? You don't, did he know how things were going to work out? No, you don't. But you assess the risk. You assess the risk. You assess the risk, right? And you make decisions, you're making decisions based on that risk, right? And this is what you need to do, right? Doesn't matter how long you're in business, right? Doesn't matter what industry, doesn't matter what business, right? Any industry, any business, any industry, any business. These are the processes that you're going to go through. You need to make money. You need to have those targets. Okay. We are almost there, guys. We are almost there. So recap. Wow. Listen, we're almost done. We covered so much. We covered so much. Okay. So we've covered, yes, it's important to understand the numbers, the importance of your accounts and your statements, keeping records of every little thing. Every little thing, you're going to keep a record of it so that you can evaluate it, you can analyze it. Later on, you can look at where the money is going within your business, right? And it needs to be easy. Remember, there is tools that allows you to search. There is tools that you can use online. We've mentioned Zoho, we've mentioned Pastel, right? That's on your phone, that allows you, that sends you alerts. You know what? If your fuel bill goes over a certain amount, beep, alert is gonna go off. Right? If this goes over a certain amount, beep, you're gonna get an alert. Okay. So you need to have those goals. You need to, we mentioned, yes, you need to have some debt. You need to have that overdraft facility that you are using from your bank that they will give you. If they give you a credit card, make sure it's a credit card and not a debit card, because a credit card builds credit status. It builds your credit history, right? So you need to have some accounts. When you do have it, pay it off. Pay it off. And make sure you don't fall behind on payments, right? Your credit score, for those of you that do not have it, by this weekend, review your credit score. Review your credit score, right? So make sure that once you need to know. You need to know. You can't put it in the wrong area. If there's no gap there, you can't put it in the wrong area. So where would you put the money that is going to give you a return? That is going to give you a return on investment, right? Because this is what an investment is. You're putting something in and you're getting something out. Where would you put it? You need to know exactly. Do I buy equipment? Do I get staff? Do I get machinery? Do I build my funnel? Do I put it in marketing? Do I put it in sales? Do I put it in efficiency? Do I put it in technology and innovation? Where do I put it? Where do I put it? Where do I put it? You need to know exactly where to put the money that's going to give you a return on investment, right? So that's all part of your planning. And when you have it, you put it on paper. Not 20 pages. 1 page if you can. 1 page, 2 page. This is my plan. remember, you need to keep your plan as simple and easy as possible so that everyone in your organization understands it clear, and it cannot be in your head. Yes, can't be in your head. No one knows what's happening in your head. You know, or some people don't even know what's happening in their own heads. So how is other people supposed to know what is happening in their head? So you need to put it down on paper. Everyone needs to be clear. These are the targets that we need. These are the targets that we're heading. This is what we need to achieve. We need these targets. We need to earn 20 mil by next year. That's our target. This is what you need to do. This is what you need to do. This is what you need to do. Everyone is clear? Great. Let's get done and let's get busy. And once we've done it, we're going to review it. And once we review it, we're going to change and amend it and improve it. That's the cycle, right? The cycle. That is the cycle that we're going to be going through, man. Remember, everything is linked to cost. What is the cost? Everything has a cost. You have a cost. Your salary has a cost. You need to put yourself a salary, because who works for free? No one works for free, guys. Your time, your energy has a cost. You need to put a cost there. This is what I need to walk away with in my business. 100,000, 50,000, that's it. Who works for free? So you need to put those costs there. This is the cost of my time, right? You're putting those costs in there and you're evaluating your business accordingly, right? And remember, you need to have those projections, growth. You need to be employing people. This is what it comes down to. You need to be employing people. You need to be growing. So yes, there's risk, but you need to plan for that risk and you need to understand, right? So all of these, this is where we started. We said, so thank you very much. We are done. These documents, right? These are documents that you're going to review, your balance, your income, and your cash flow statements, right? These are the documents, part of your financials that you're going to review. So hopefully you guys, the understand those documents. There's lots and lots of courses, right? On free courses. You can watch a YouTube video. Listen, it is so easy these days. You don't need to know. You don't need to know everything. You don't need to know everything. You don't need to be good at finances, right? You don't need to be good at accounting, right? You don't have to. You don't have to understand how all of this is a YouTube video for everything. What you need to have is, you need to have your plan and your structure. That's part of steering. So your choice is, once you have that plan, you need to identify, yes, now it must get done. Do I do it? Do I figure out how to do it? Or do I get someone to do it? It doesn't matter. Someone needs to do it. And someone, you need to be putting energy and time into these areas in your business, because it's something that no one else will be able to do. But you're going to have to do this, right? It's your job as a director, as an owner of a business. No one else is going to do this, right? This is what you need to do. Everything else can be outsourced. Are we clear? Everything else, you can outsource everything else, but you cannot outsource this. This is the work. This is the work that you need to do, and you need to make sure that it gets done. Okay, so I hope I was clear. We are done. Thank you very much for your time and your energy, for listening. If there is any questions, okay, if there's any questions, please, you can unmute yourself. You can put up your hand. You can type it in the box if you are shy. There's no good or bad questions or right or wrong questions. You ask any questions that you want. I'm going to stop sharing my screen, and then you can ask a question, any questions that you want. Okay. Stop sharing. There we go. Excellent. So is there any questions that you may have? Please go for it. Ask your question. Remember, we're going to share this presentation with you. We'll share the PowerPoint with you as well. If you have any questions, you can unmute yourself. You can put up your hand. If you have any question relating to your business, you can ask it now. If not, I hope you have a great week ahead. It is midweek, right? There's a weekend coming up, hopefully some sunny weather for everyone. But remember, you need to be investing time into this. It's a very, very important part. I know that in schooling, when you go to school, you do accounting, but they don't teach you about the business. They don't really teach you about how business actually works, right? You get it through trial and experience, and by doing things. So hopefully you take some of the information, you apply it to your business, and make a start. Remember, this is change that we want. We want you guys, we are non-profit, right? All we want you to take the information. We want you to take take an opportunity to grow, right? And we know that it's not easy. Look, we know it's not easy taking risks, employing people, worrying about salaries and all of these things. But we're saying that there's support for you, there's opportunities for you, and there is reward for you. For those that is willing to take the risk, there's great reward. There's great reward. It's worth the risk and worth the effort for taking it. So please do so. And there is support available for you and opportunities as well. Thank you very much. Hope you guys have a great week. Thank you very much for joining us. Thank you very much. We've covered everything. Is there any questions? I'll leave it open just for a few minutes. If there's any questions, thank you. Songesiwe Shili Garnet. Do you have a question, Garnet? Unmute. You can unmute yourself. You can unmute and ask your question.
Just would like to know, when is the next event, sir?
The next event, I think it's on the 3rd. It's going to be in September. It's on
3rd.
business. Yes, the 3rd.
Yes.
The 3rd of September. It's on how to do business with government. Hopefully you guys are all registered. If not, please attend that one. It's how government works and how to register with all the government departments. Remember, lots and lots, 4,000 municipalities, City of Cape Town.
And you know
are you
aware?
Yes.
Are you aware of that one in Atlantis that's opening?
That's always been there. That's always been there. So Gershwin runs the one in Atlantis. Yeah, so we are aware of that.
So that's gonna be a live one.
Yes, yes. So remember, the city has 24 districts. They run workshops in all the different districts. You need to speak to your local City of Cape Town councillor. Each area has their own department. You go to them, you just find out, they share information, but the communication is not the best in the city, right? So you go there, you ask what is available for you, but remember, all the support services that's available for the city is available in all the areas. You just need to maintain contact with them and find out when they are in your area. Okay. If they're not there, the programs is also run live at the City of Cape Town at the underneath the Golden Acre. That's at the hub, corner of Strand and Adderley Street. They run the programs there as well. They have networking events, which is great to go. So we share on our platform. We will also share the dates for the networking events. Those are great events because you get to meet the people involved with the city, the support that is offered through, and we have it at the hub. That is the support center for small businesses. So I will share the dates for those networking events. Please follow our channel, Greenhouse Foundation. We share the dates on our Greenhouse Foundation page and also our Greenhouse channel on WhatsApp. We share everything on there. So please follow our channels, Greenhouse Foundation. Thank you, guys. I don't know if there's any more questions. Thanks, Garnet, for that. If there's any more questions, please don't be shy. We all small business owners here. We all learn from each other. So don't be shy. If you have a question, go for it. You can unmute and ask your question. If not, we will close and you guys can carry on with your business. Any more questions? Going once, going twice. Thank you very much, everyone that is here, for joining us. I hope you have a great week. Please invest your time. Don't waste it. And we will see you for the next one. That's on the business development online here again on the 3rd. Thank you, guys. Keep well. Shukran Khadija, thank you very much. Just go through quickly. Zanele Skippers, thank you very much. Stembelani, Songeziwa, Sheila, Samira, Diesel, Mutulezi, Ina, thank you very much. Khadija, Fronin, thank you. Claudine, Angelo, Garnet, thank you very much for all of you guys for joining us. Hope you have a great week. These guys invest your time. Lots of opportunities for you guys as small business owners. Please keep well. See you for the next one. Thank you.
Yes, Ellen.
Do you have a question?
No, thank you, sir. Have a great weekend, you too.
Thank you. Thank you, God.
And keep out of the storm. And keep out of the storm.
Yes, man. It's freezing here.
All right.
Okay. Keep well, guys.